It's Tuesday, March 6, 2012. I'm Curtis Hollister, and you're watching 52-Week Low, the show that profiles companies trading at or around their 52-week trading low. Today, we're talking about Exelon, trading under the symbol EXC on the New York Stock Exchange. And joining me to talk about the company is Robert Weinstein, founder of paytotrade.com. Robert, welcome to the show.
Thank you very much. It's a pleasure to be here.
So, Robert, we had a chance to chat a little bit about this company in advance of this segment. You know, these guys seem like a solid player. They are a mega company from the point of view of production. They produce around 33,000 megawatts, which is a lot. And they seem to have all the kind of numbers that should have the stock higher. Why are these guys trading so low?
Right. Actually, they're number one with about 33, 34 gigawatts. They recently merged with Constellation Energy, and they're also somewhat vulnerable to pricing fluctuations of natural gas, which natural gas has recently been trading at all-time lows.
Yeah, that seems to be the nail that's in the coffin of a lot of companies within the energy sector. They've bought these assets in the past, they've got them now, and now they're the anchor that's kind of dragging their breathing apparatus underwater in a lot of cases. Is that the case with these guys, or is that the rationale that they've had this drop since the beginning of the year? I think it's about a 15 or close to 20% drop since the beginning of 2012.
Right. It's been a relatively brutal time for shareholders. There's some things that have recently changed along with the merger, although that was relatively dilutive for the current shareholders. I believe that creates an opportunity now for current and prospective shareholders. The balance, the business balance is now about 50-50 between regulated and unregulated with the utilities, and also with the utilities and generation as.
Now, these guys are paying basically about a 5% dividend, which is pretty significant within the market. Like, that's got to be attracting the next generation of investors to these guys when they drop down this low.
Right, as a long-term hold, they are currently paying about 5.4%. The current dividend is $2.10 a year. So as a long-term hold, this is an excellent prospect for sitting back and collecting dividends.
So what's the possible, before we get into the trade that you see with these guys, what is the possible downside of them heading south of where they already are? Is that, that's always a possibility, but do you think it's a real possibility?
Right. There are some real risks with this company, and we've seen that in Japan in the recent past. Exelon has a lot of nuclear production capability, and with that comes the risk, along with the ability to generate as much as they do. The other thing is they are regulated with about 50% of their business, and so they are subject to the whims of regulators. The other side is with the unregulated portion of their business. If natural gas prices continue to remain low, that would continue to put a headwind on the share price.
Yeah.
So those are real risks. There's also other overall economic risks. If the economy doesn't pick up, if demand doesn't pick up.
But even still, even with the economy, these guys have had a pretty good bottom line, hovering around 20-25%, have they not?
Right. Yeah. The margins have been relatively consistent, even going through 2008, 2009. Matter of fact, the margins in 2009 were even better than 2010 and 11, and they do appear to be moving back higher towards the 2008 levels. The other thing is that the company has been a disappointment during earnings season. The last 5 earnings seasons, last 5 quarters, they've either at best met expectations or significantly fell short of expectations, particularly for the last quarter in 2010. Now, for the last 2 quarters, expectations have been 20 cents per share, and they came close with 19 cents, but that's still a shortfall of about 5%.
Gotcha.
Revenue, yeah.
Sorry, go ahead. Sorry.
Revenue has been relatively consistent through the years, though. Back in 2003, 2004, they had about $14 billion in revenue, and it has steadily climbed or been somewhat relatively the same year over year, which would be expected out of the utility. But they're approaching $19 billion a year in revenue currently.
Gotcha. So let's say, for example, you say this is a dividend-paying stock that is a profitable company. They've got a pretty solid revenue stream. They are profitable, quite obviously. If this is a long buy, it's a long buy. If it's not, what do you suggest?
Right. If it's not going to be like perhaps a core holding, then I would probably be looking at a call right where you buy the stock and then you write an option, especially like the April series. I think the March is too soon. With a high dividend paying stock, the options will tend to have very little time premium built into them because of the amount of dividend. So looking at March, it just doesn't look attractive. But further out, April and beyond starts to look attractive at the 40 strike price and perhaps even the 39 for a more conservative approach.
And do you see these guys just continuing to from the point of view of catalytic events looking forward, do you see them as like doing more mergers with other major players, or is this just about them kind of continuing to ride this out, and as prices go up, their value is going to be going up?
Well, they have been buying back stock, which demonstrates an inability to use the money, the cash flow. They have about $4.85 billion in operating cash flow and about $1.4 billion in levered cash flow. So the fact that they're buying stock makes me believe that they're really not finding much for opportunity out there. But with that being said, if natural gas prices are moving up and the cash flow increases, they're going to want to do something with that money to put it to work. So I could definitely see when things improve that they would be looking for other opportunities to acquire smaller companies. They are the number one player, so they certainly have the capability of doing pretty much any acquisition that would look attractive to them.
Yeah, and obviously green energy and those kind of new and renewable energies that are kind of coming out of the market. I'm sure that they're starting to dabble in those and see where the options play.
Right. Exelon does generate electricity with some renewables and also with hydro, but nuclear is definitely their main focus.
Gotcha. Robert, thanks so much for your time.
Thank you.
If you'd like more information on Robert Weinstein, you can visit paytotrade.com. If you'd like more videos from public issuers or industry experts, you can visit investorchannel.tv. I'm Curtis Hollister, and you're watching 52 Week Low.